Hi, everybody. It's Reyhaan Aboo here from AlphaStream Capital. Thank you very much to the African Mining Summit group for organizing this opportunity to present to you all. I really appreciate it. We're a new entity, a mining finance entity that's primarily focused on emerging markets. We wanted to take the opportunity to introduce ourselves and have a couple of slides to share. I'm going to go through a couple of pages just to give you some sense of who we are and what we're looking at in terms of opportunities and what we're looking for. So, as I said, we're a mining finance entity that's dedicated to emerging markets. By way of background, the senior management of the team have all spent a significant amount of time operating in emerging markets, primarily in Africa, sometime in South America, and a little bit of time also in the Far East. From our perspective, our business model, we try and position ourselves as a compelling alternative to classic debt or classic equity financing for mining companies. We believe in a sort of a long-term partnership type model, and we think that the current offering on hand for mining companies is either very short-term focused or very return-driven in the near term. And for us, the opportunity to invest in mining entities with long-term prospects and strong management teams is what we're looking for. I guess the other maybe unique point about us is that we're Middle East based. So we're based in the ADGM in Abu Dhabi, and our business is really a JV between Portland Partners, which is a UK-based holding company, and Abu Dhabi Catalyst Partners, which is an Abu Dhabi-based investment fund, which is funded by Mubadala. In terms of the actual types of instruments that we look to use, I mean, primarily, in terms of structure, we think about investments using royalties and streams. I would say that because we're a private entity, we're not constrained with respect to the structure. So, we very often find ourselves looking at loans or prepaids or even convertibles, which have been presented to us as the preferred structure, and tweaking them and sort of making a few adjustments to be able to allow us to meet our longer term objectives, but also give the mining company or the target company maximum flexibility earlier on in their lifespan. And early on in the investment lifespan in particular. I mean, generally speaking, the market has seen a number of royalty and streaming companies out there. There's lots of listed examples with lots of transactions which happen on a fairly regular basis. But maybe just a quick sort of 1 or 2 minutes. A royalty is really a contract between a financing entity and the mine, where you look to pay upfront capital, and in return you receive a portion of the revenue line. So fundamentally, what the investors is looking for in that particular case is taking, complete upside and downside risk on the production profile, and complete upside and downside risk on the underlying commodity price. A stream, on the other hand, a stream is a contract where a portion of the commodities is sold either at a discount or at a fixed price for a pre-agreed period of time. Both of these types of instruments, again, in a stream, the investor is looking to take upside and downside production risk and partial upside and downside commodity price risk. Both of these instruments tend to be longer dated type instruments, and because of the risk sharing, which is obviously production and the price risk, and the long-term nature of the instrument, it does create a partnership structure. We think partnership structures, particularly in the emerging market context, are very important, both in terms of the initial investment, but also on an ongoing basis. And we'll get into a few sort of other ancillary elements with respect to partnership structure in the coming slides. I mean, generally speaking, from our perspective, we would be happy to look at opportunities with a life of mine of more than 5 years. We'd be happy to look at development as well as producing opportunities. 12 to 24 months of development risk is manageable to the extent we understand that path to production. And then obviously, strong management teams and good, sort of cost of production are important. In terms of the long term, the royalty and stream compare quite favorably with respect to vanilla loans and classic equity. Vanilla loans, although they are not dilutive, they do create a fixed repayment schedule, and they do create a liability profile which is materially shorter than the underlying life of the asset, and a liability profile, which does increase the risk and exposure of the underlying asset to fluctuations in production and price. Similarly, with respect to equity, whilst you have much more flexibility with respect to your repayments and much more flexibility, obviously, with respect to structure, it's dilutive for shareholders. Traditionally, equity has been, an instrument which has been much better suited to, a development or riskier mining ventures than loans for these reasons. But royalties and streams sit, somewhere in the middle. So they are not dilutive in the form that equity is, but they don't have the sort of fixed repayment characteristics of a loan, and they are generally much more flexible. In our case, as AlphaStream, we are also able to provide, more flexibility with respect to simple royalties and streams, and we can look to tailor those particular elements, whether it's introducing caps and floors, or whether it's introducing, limits in terms of time, or introducing some element of interest to fixed repayment or fixed interest to reduce the percentage of revenue that's attributed to the royalty or stream. There are various different things we can do. I mean, from our perspective, the key point here is that the funding should try and, as far as possible, match the life of the asset. It shouldn't create extraordinary strain on cash flows due to idiosyncratic shocks. And the opportunity is really to look at miners across various different geologies and also various different types. Whether it's tailings operation, an underground operation, or a deep underground operation. From an AlphaStream standpoint, our general focus is really on precious metals and technology metals, but it's fair to say we tend to, 80% of our time generally is spent on gold and copper. We in terms of geography, you can see from the graph in the background, Africa is a big focus, Asia is a big focus, being based out in the Middle East. Obviously with COVID going on, it's very easily accessible, and in terms of the experience of the team, that's where it definitely lies. We do have some experience and have looked at a few projects in the South American landscape, but at this moment in time, we haven't closed anything there. I think in terms of the AlphaStream, offering, other than what I've mentioned before with respect to being very long term, with respect to being sort of emerging market focused and partnership focused, there are a few other things that I'd like to pick up. So, emerging market focused is, I think, important because it means that our risk tolerance is different. In our world, we would think about the risk of different assets in different jurisdictions relative to each other, not relative to a Canadian or Australian operation. I think having a partnership approach is also really important. We are keen to partner with local banks. We're keen to partner with local entrepreneurs and local management teams. We feel in emerging markets in particular that local knowledge and that local connection is critical, both in terms of the success of the project and also, more importantly, when there are hiccups or hurdles, being able to overcome those. In terms of our model, as you can see, we're very much focused on returning returns based on the revenue line, which is effectively the production profile as well as the commodity price, and sharing those operating risks and with the mining team and with the management of the mine is critical. We're not hands-on. We're not trying to control, but I think we have a fair amount of experience, and to the extent that's required to be drawn on, we are there to help. Ultimately, our aim is to have the mine produced for as long as possible and as low cost as possible. I mean, we do have a multi-commodity focus. So as I mentioned earlier, it is both precious metals as well as technology metals. And in terms of our team, which I'll go into in more detail in a second, but we're an experienced team. It says in the presentation, more than 100 years of combined relevant experience. But I think what is quite unique is that we have both mining technical expertise, financial expertise, as well as M&A or execution expertise with respect to transactions. We have this business model has been born out of the fact that we have this experience, but also we think there is a opportunity in the market for somebody like ourselves that is emerging market focused and that is happy to work through the issues that emerging markets present themselves, as well as obviously being happy to work through the issues and the technicalities of the mining process. I think the other element to touch on at this particular point is also from an ESG standpoint. So, from an ESG standpoint, we're very focused on making sure we're, only investing in opportunities that are have the same sort of values with respect to ESG as ourselves. And these are, a very basic set of global values that I think, most people share. But I think where we also are a little bit more focused is investing in mines and in opportunities with respect to technology, whether that's the classic sort of software technology, or also in terms of the technical technology, in terms of extraction, in terms of water management, power management, etc., and investing in those opportunities that improve the ESG of mines. I think there's a substantial amount of opportunity to be had there, as there's obviously a transformation or a transition going on with respect to the mining sector and the increasing global focus on ESG. I mean, the last point to add on this page is really with respect to AlphaStream's global network. I mean, as you'll see in the next couple of slides, with respect to our background and history, we have a significant amount of experience and connectivity, both in financial markets as well as other miners and mining experience, which we're happy to bring to bear with respect to any of our portfolio companies. I mean, a more specific slide with respect to ESG. I mean, we're committed to investing only in opportunities that share our values, and we've described a few of these here. I mean, maybe to touch a bit more detail in terms of the investing side. So, for example, one theme that we spent quite a lot of time on is looking at the investing in the energy transition that's taking place in terms of for mines, where green energy solutions, whether they be solar panels or otherwise, are being provided to miners. Generally speaking, those types of solutions require very long-term financing solutions, and that's something which plays into our hands, because we're looking at long-term financing solutions and looking at partnering with underlying mines. There's also a substantial amount of work that's that we've come across and seen with respect to the impact of water usage, the impact of with respect to air pollution and various other things, and the technology that's been applied to these problems is very interesting to invest in and very interesting to pursue. I mean, the other element is just with respect to ethical conduct and labor rights, and we do spend some amount of time also thinking about the artisanal sector and how they can be brought into the broader fold in terms of trying to create a more professional sector to remove the elements of mercury, child labor, and these sorts of things, and spending some amount of time thinking through that, which I think is relatively important as well. So not just the large global miners. In terms of our location, we believe we have a strategic advantage, especially trying to in terms of our geographies with respect to emerging markets, being based out in the Middle East, being based in Abu Dhabi and in the ADG in particular. It provides us with a very sound legal basis and legal jurisdiction. It provides us with, from a geographical standpoint, we feel like we're in the middle of the flow from effectively from west to east, which is obviously been relatively well documented over time. And for us, the support and the opportunity from that we receive in the Middle East is fantastic, and it provides us with a base from which to grow globally. Just a page to describe a little bit around our process. Naturally speaking, these processes never really meet these timelines. Some of them are much quicker. Some of them are much slower. It's really a function of the data set. It's a function of the experience of the team with the underlying investment. But this provides you with a fairly good idea of our process. So, an initial review, generally speaking, would take sort of 3 to 5 weeks, depending on what the quality of the information is provided, and what and how much work we need to do to get through that. A detailed due diligence process is obviously, generally speaking, a little bit longer than that, and that's obviously, undertaken with some sort of economic, high-level economic terms in mind, and having been agreed. And then from our perspective, there's an ongoing internal approval process through the diligence process, as well as the deal finalization process. And then lastly, with respect to documentation and funds flow, this generally is, if the previous term sheets and diligence processes have been done in an efficient manner, this can be pushed through in a fairly short space of time, subject to sort of the negotiation and lawyers finding any particular issues at the last minute. But I think this gives a fairly reasonable overview of a deal life cycle as it moves through our process. Obviously, post this, there's a monitoring process and a monitoring system that we have in place, or process that we have in place. It's not onerous in any way, shape, or form, but it is a requirement, obviously, as the investor. Just to conclude, just a little bit in terms of our broader team. Obviously, I said I'm Reyhaan, Aboo, in the middle there to the left, and myself and Prashant Francis are the co-CEOs and the co-founders of this business. We both have a banking background, and we have sort of 15 to 20 years of experience in investment banking across M&A as well as markets and securities. John Gould and William Trewick are our technical experts, and they both boast 40-ish years of experience across multiple jurisdictions, and a few different commodities. And I think what's really important about and worth highlighting with respect to this team is the different skill sets. So it's a fairly you have fairly unique set of skills that are let's say been honed in a fairly strong professional environment that we all bring to bear in our AlphaStream business, and we bring to bear to the opportunities and investments that we look at. And that's both in terms of the initial process with respect to bringing a transaction into our portfolio, but also the ongoing monitoring and management and interaction with management teams And whether that be, from a technical standpoint, to be used as a sounding board, also, thoughts and ideas around, further capital raises, or further M&A. We're always open to those types of conversations. I mean, just to conclude, from an AlphaStream standpoint, our website is alphastream.capital. We're very much open to opportunities and open to investment. We're a fairly new fund, so we have money to spend, and we're very keen to do so on the right opportunities. I hope you enjoy the rest of the conference, and I look forward to connecting with you all in due course. Thank you very much.